Recession is all over the news. The stock market is starting to worry about it. And now I have data that is actually explicitly showing us the jobs numbers. They are off by millions, literally millions this year alone. I'm going to give you exactly what you need to know. The first thing is the economy and the markets. I'll take you through that. The second is the production or lack thereof. And the third thing is the job secret. They don't want to tell you it, but I'm bringing it to you today. You don't want to miss it. Let's begin. Let's start right here with the share of Americans living paycheck to paycheck rising to 63%. It's important to note that while you're going to see 63% here and maybe 61% there, ultimately I show you these surveys all over the place from different sources, and it's roughly about the same thing. And the important part is that it's not somebody who's making 35,000 or maybe somebody making 100,000 or in some cases even 250,000. All across the spectrum, people are unable to keep up. And what are we talking about here? Keeping up with the Joneses or maybe the Kardashians? Either way, it looks like this is the reality for so many people. You look at different surveys, you look at different studies, they all show the same thing. We've got inflationary factors, and yes, part of that is people simply trying to keep up, but you look at what happens in these times, they become more difficult. Why? Borrowing costs have risen. That's the first thing that we need to look at. While recent crashes in British bond prices, real estate in China, and stocks in the US were driven by different catalysts, they all reflect the common cause largely ignored, the popping of a worldwide wealth bubble. The implications are huge for economies, fiscal and monetary policy, investors, and savers everywhere. What happened? The difference was, after so many years of super low interest rates, they decided to change that policy because of inflation rising, and now you've got a big issue. Huge, in fact. And I want to break that down further here. But of course, when you see people's real estate values dropping so significantly, that has an impact on their overall wealth. Because if you look at a place like Canada or maybe Australia, a large percentage of their wealth was in their home. So they could just pull it out like a piggy bank, home equity line of credit whenever they need it. But what happens when their home value starts to drop? They stop doing that. They stop doing this, and as a result, they can't buy enough stuff, and the economy is impacted by it. In fact, I'll show you more about that in just a second. We get reports like this all the time, and this happens to be one where November retail sales fell in the biggest drop in nearly a year. Shoppers slowed the spending on autos, furniture, and other goods as inflation cooled. Yes, inflation did cool down, but we're talking about, I love the way they say this. The truth is, the prices didn't come down, but inflation is less hot than it was the previous month or the previous year. Like the way that they say it is always, and in fact, entirely done so as a manipulation, but that's a whole different story. So the stock market didn't like some information that came out of the Federal Reserve. I don't know what that was exactly because I completely saw the writing on the wall. The Federal Reserve has been saying it. We're going to do 50 basis points. And what did they do? 50 basis points. And what did they say in the meeting? Did you see the previous video, by the way? Have you seen it? I'm here. I don't hear you guys. Look over in that other video. I broke it down, not just what they did. They raised by 50 basis points, okay? But understand what that means and what they said in depth on a deeper level. I'll show you that previous video to this one. And the markets, for some strange reason, went down significantly. Did they really, were they really hawkish? Not really. It was the exact same thing as the previous meeting. So what's happening here is part of a cycle. If you look at the chart right back here, I know it's really small, but this is the S&P. And if you follow that, it's going through a pattern. And some say it's following a similar pattern to 2008 and 2009, and we're not quite done yet. That's what some say, but it all really depends on how things unfold. And the Federal Reserve is not the only one raising interest rates. You can see the Bank of England hikes key rate by 50 basis points, will continue to respond forcefully if needed. Many central banks around the world doing the same thing. This is what's changing. This is the wealth bubble that's popping. Recession fears could trigger a, quote, lipstick effect on deal activity in the next year, saying, you're not seeing those huge purchases taking place, but instead you're getting the little ones here and there where they can. And that, of course, does have an impact on these companies and their bottom line. And it just shows their restraint. Just like the consumer not going to the store as much to buy the unnecessary flat screen TV, well, you're seeing the same kind of thing happening with businesses. You may have seen Jeff Bezos saying that, hey, you might want to hold off a little bit, and we don't know what's going to happen in 2023, so I want to relax a little. This, and it'll connect directly in with what I show you in the next section. But China's retail sales shrink far more than expected. Industrial production disappoints. Then we have container shipping rates probe a fragile world economy for a bottom. Nobody knows what's going to happen. They're basically saying that, now the prices are too low. We went through this whole cycle of normal rates, everything's fine, everything's great, and then they shot through the roof. And by the way, those companies made more profits than ever. All right. Now they've come down to a level in which it's much more reasonable. And supposedly, in the article anyway, the quotes are saying, it's below where we can afford it. I mean, make up your mind. The container rates are important because that's how a lot of the stuff is getting transported all around the world. Yes, it has to eventually make it to a truck, but a lot of it is just happening on sea shipping. And it's cheap sea shipping. The world wants the Fed to stop raising rates. How many times have you heard me saying this? That other central banks around the world and other economies in general basically plead with the Federal Reserve, please stop raising interest rates. Don't do it. We can't handle this. The US dollar being strong is not a good thing, of course, in some ways for the rest of the world. This is what I've told you so many times, and it's just funny. As soon as I saw that here, I had to include it. I had to. Now, what I want to talk to you about is something, in my opinion, so key, really, because it's going to describe where we are at today. A recession can have devastating impacts on businesses. When investors fear a recession, they tend to be more cautious when it comes to investing, which can lead to a decrease in demand for goods and services. This can cause businesses to cut back on production, resulting in layoffs and a slower economy. When interest rates are high, it can also make it more expensive for businesses to borrow money, as well as for consumers to purchase goods and services. This can lead to lower consumer spending, further damaging businesses. In the past, when interest rates were high, stocks have performed poorly, as investors can find better returns in other investments that have less risk. Quote, a recession is when your neighbor loses their job. Depression is when you lose yours. This quote highlights the importance of taking caution during a recession, as it can have a negative impact on individuals as well as businesses. This is what we need to realize today, right now, as we go through this cycle. It's important for you, potentially the businesses that you invest in, if you have your own business, and so many other reasons. So pay attention. I'm connecting all the dots for you today. Now, if we look at this next aspect, it might really ring a bell for some people. We've seen this before. US factory production declines for the first time since June. It's manufacturing. You know that in general, manufacturing is not coming back to the US, just the way that things are set up. But we need to have maximum growth going into a recession. You want every leg up possible, every advantage possible, and it doesn't look like that's the case. Here's another example. US steelmakers flag recession concerns, rising energy costs. They can't afford it. It's not just in the US. We see the same thing happening in Europe as well. We've got China. China's economy slows. Look at the red line or that pink line. That's industrial output. And then the blue is retail sales. Both of them really down hard right now. Lockdowns, everything else surrounding it is clearly problematic. And then, of course, you've got on top of this a really big issue, and that is US slapped restrictions on Chinese chipmaker and other companies over national security worries. Every single day I'm bringing you the information, and what does it say? More restrictions, more tariffs, more back and forth between the two countries, and that is significant. And I'm very concerned about what's happening here. Are we really just leading up into a situation with Taiwan? Is this it? I don't know. But that's what we must be prepared for in any way that we can. That's why I talk about the pillars of prosperity, you doing what you need to do for yourself and for your family, and really highlighting the fact that the world we're in today is not the one that we've seen before. This has a lot of information from, ringing the bell from before, but there's something else going on, let me tell you. Now, you've heard the numbers, the jobs numbers. Oh, it's so fantastic, it's wonderful. But there's an anomaly here. Big one. Household versus establishment survey. Divergence hits an all-time high. Whoa, what are we talking about here? Well, it's a record 2.7 million difference. How could this be? And what is this? Well, you've got the household survey and the establishment. The establishment survey is going to record the information that they tell you on, your CNBCs and your Bloombergs. The household survey is different. It's including other information, which I'll show you in just a second, some argue, reflects a more realistic view of the jobs scenario. Now, wouldn't you like to know that, or at least know both, and maybe you want to average them out or something? Well, here, job changes, March to November. What do we have? Full-time jobs are actually down significantly in that period of time. But what's up? Part-time jobs and multiple job holders. Now we get a different element to this story. Now, what do you think is better for the economy? Stronger, shows a strong side of the economy. Wouldn't it be the full-time? Part-time and multiple job holders, sure, that's good, okay? People are working somewhat, but you don't have that full-time employment that people really need. And when I see multiple job holders continuing to increase, this is worrisome, very worrisome, because it means, well, you could have the fact that, sure, people they just like doing this job, they want to do it, they want to work on the golf course on the weekends, I get it, that's fine. But a lot of people, not the case. Not the case. They don't want to be an Uber driver after work to make some extra bucks. They've got to pay the bills. And so that's why they're doing this. That's what's going on today. A 2.7 million differential. That's a record. And so the statistics that you're going to get, even on the other alternative news, it's just unfortunate. Look, I do show you the official numbers, but at the same time, I break it down to explain to you exactly what's going on. You generally cannot find that, especially in the mainstream, but even in the alternative. They don't really break it down to allow you to understand what's happening. So if you appreciate that, hit the subscribe button, and I'm going to keep bringing that to you every single day. This is the financial education channel that's been operating for over a decade now. This is, I can't believe it. I cannot believe it. This is the Federal Reserve. Okay, Philadelphia Fed admits there is a difference. Okay, early benchmark revisions of state payroll employment. Now, they didn't quote 2.7, but they literally said this. It's the third paragraph in. In the aggregate, 10,500 net new jobs were added during the period. Okay, so I just said 10,000 jobs. Okay, rather than the 1.1 million jobs estimated by the sum of the states. Okay, so we were told it's a million. That's the number they're going to report. But in actual fact, it was basically zero. Like, think about that's coming from the Fed, my friends. Listen to this information. This is what we've got to know. The reality. Why do we have to believe what they tell us when we have the information right before our very eyes? For anybody paying attention to this, Look at the details and understand this is part of a pattern. It's a cycle. You raise interest rates, you create problems. Stock market can't figure out which direction it's going. As a result, the jobs, the businesses are kind of saying, no, we're not going to hire right now. We're going to lay some people off. We're going to cut back on spending. We're going to cut here. We're going to cut there. Everything. And the economy just starts really grinding to a halt. How long it goes, we don't know. But this all depends on so many factors that I bring to you here. If you want to know those things and have them explained to you in plain English, hit subscribe, and I'll see you tomorrow. Take care.